Welcome to Subramani. A couple of weeks ago, big international newspaper, I don't wish to name them, said the inflation report has crashed the equity markets. This is very nice to know that there are people who write headlines, and headline writing is their only job, right? They don't understand the subject matter which is being written about, and if they did understand, then they would not be just seeking which are the words which are very important in the SEO and using those words, right? They would not be writing headlines, they would be writing content. Why am I being so vicious on them? It's simple, because to think that on a Tuesday morning the market got up and discovered inflation is so ridiculously wrong. And so ridiculously wrong to say the Fed did something or RBI did something and therefore the markets fell, because first of all, the market did not discover inflation on that particular Tuesday, right? They just knew what is inflation, and the market is a relentless processor of information. Remember this, it's a relentless processor of information. Every second, whatever is happening in the world is being processed by the market. So somebody knows a factory is on fire, they'll go and sell it. Somebody knows that the factory is insured for a good price, will go and buy it. Somebody who will go and short the fire insurer, right? So various actions from all over the world are impacting your prices, and they're impacting on a continuous basis. They are not waiting for the Fed report to say, oh, inflation is 8.3 and therefore the market falls. No, the market already knows it is 8.3. The Fed is just announcing it. So whether it is the Fed announcing the rate or whether it is RBI announcing the rate, the market knows what is going to happen. When the market comes down, the market is providing for a 0.75 basis points increase in interest rates by the Fed. Anything above 0.75 would have got a further greater crash, and at 0.75 the market could also go up saying, okay, now it's over, the next hike will not be 0.75, it may be 0.5, so the market could go up. So market is constantly telling you that this is what we are expecting and this is what is already discounted. So if there is a share price which is here and there is a 0.75% increase in interest rates by Fed and the market remains as it is, it means the price is fully discounted. On that particular day, it may waver a little bit, but because of some extra buying and selling, but the price is definitely including the 0.75 hike which the Fed was doing or the 0.5 hike which the RBI was doing. So first of all, let's understand that. An important thing to remember is the RBI or the Fed cannot really do much with the interest rates. They just give an indicative interest rates of the immediate term. If I want a 10-year loan, it's not the Fed is going to give me or Reserve Bank is going to give me. There are other organizations which give me. The government of India has no resources. What it collects from you and me is its resources. From that it has to give. RBI has no resources. It has to just tell banks that this is a good rate at which to give. That is for the prime borrowers. The bank may be charging me much more than what the Reserve Bank is telling them. In fact, there are cases when the bank charges less than what the Reserve Bank is telling them. So please remember that in the long run, the market prices of any commodity is determined by demand and supply. Ditto for money. If there are more and more people coming and keeping money in bank fixed deposits, chances are banks will start lending at a rate which is more attractive than it is currently prevailing. So if 4% is the rate at which bank is willing to borrow from you, the bank will be happy to lend at 6%, assuming it wants a 2% spread. If the bank is borrowing from you at 7.5%, chances are bank will be lending at 10.5 or 11% to make up for the extra risk and the margins, its own expenses, etc. Right? So that is what has happened. Demand and supply of money is determined by what is happening in the economy, not by what Fed or RBI say. Government of India collects money and gives it out. That's it. Banks collect money, keep the margin and give it out on loan. It's as simple as that. So Fed and RBI don't have much of a say in the long-term interest rate, which is determined by demand and supply. It is nice to remember that the market will always have its say, and the market will decide how interest rates will vary, not because what the Fed says, right? If the Fed controlled the interest rates, then the markets especially the forex markets would be in a complete topsy-turvy situation. Look at what has happened in UK today, right? Something has happened that the pound taken a beating and your gilt has fallen by such a huge percentage, right? So these things do happen. The federal banks can help a little bit, but not really much. Ultimately, it is about demand and supply. If there is no demand for pound, the pound will go down. In fact, I think the pound will take a pounding. Sorry for the pun, but the pound will take a pounding as people know that it is being artificially supported by the Central Bank of UK, right? Markets will have their say. Markets will have their say very loud and clear, and any artificial attempts to hold the gilt at the same price, hold interest rate at the same price is not going to happen. What is really happening is the market is pricing in the Ukraine war. The Russian chances of a victory seem to be more and more remote. It will have to be a ceasefire. Somebody will have to give Putin a very honorable exit, whatever it means, because there is nothing called a small nuclear war. If it's a nuclear war, it could be the Third World War, right? It's as bad as that, because will it really happen? Will Putin press the button? We don't know, but who is Putin? Putin is the same guy who missed the Mikhail Gorbachev memorial, right? Because he thought that that Russia should never have been broken up, right? So he's the same man. So those are his thoughts. The market is pricing all that apart from interest and what the Fed is doing or what RBI is doing. It is very difficult to imagine there will be another sell-off if there is a 0.75 rate hike by the Fed, right? That may not really matter because the price, it's already in the price. But if the Fed were to do a 0.5 hike, then they would say, oh, the worst is over now. Next quarter, maybe 2023, mid 2023, they will start reversing because there is a recession, there's not enough growth, there is a joblessness. So the reverse could happen, right? So don't worry about what the Fed is doing or the RBI is doing. They're collecting money from you and me and giving it to the people who want it, who deserve it. I'm not cribbing about it. I'm saying that is the only thing they can do. They cannot determine prices for things which they don't control, because it is interest rates and exchange rates will be controlled internationally. Do you think India alone can keep on increasing interest rates while the world is not increasing interest rates? It is impossible, right? So similarly, can we keep on dropping interest rates when nobody else is dropping interest rates? That is also impossible, because so many factors act upon it, including debt pricing, gilt pricing, equity pricing. All that is acting upon your interest rate and your forex rate at which your rupee dollar is, right? So if it is 83 or 84 or 85, you know that the dollar is strengthening. So understand all this, and all this is having an impact. The market is discounting all the known probables. Of course, there will be a lot of unknowns, but if there is no Russian victory in Ukraine, if it is our man does not want to come out so easily, will there be a nuke war? That's a question which we may not yet be discounting, but everything else is discounted. The Ukraine war is fully discounted. So if there is a ceasefire, will the market go up? Maybe, maybe not, right? So don't get into this what Fed will do, what RBI will do. They are just announcing, and the market already knows what the announcement is. You and I may not know that it is a 0.75 or a 0.5 hike or a cut, but the market definitely knows, and it's already priced in. Thank you.